Okay, again, just a quick summary. Strat 1A creates lower lows. Strat 1B, we see consolidation, okay, because price makes its way to previous high. All right, and then now we're going to Strat 1C, which means price makes a push, we see exhaustion, but not just any exhaustion, an exhaustion that's also protected by Fibonacci retracement. Because remember, we're looking for where is the market going to enter, and why is Fibonacci extremely important, okay? This is not going to be a course on Fibonacci. We can spend an hour on Fibonacci, but in summary, Fibonacci is used by algorithms and artificial intelligence in the market. As we know, the market there's a lot more algorithms, there's a lot more artificial intelligence in the market, and they look for area sensitivity. So what patterns, what formations, these systems look for zones, they look for Fibonacci retracements, especially the 38.2, the 50, 61.8. Okay, and then it also looks for other, pivot points and other indicators. But that's also the problem with algorithms, is because they look for indicators, they lag. Anyway, so let's get into it. Okay, let's go to 1C. Okay, strategy 1C is the third most common exhaustion formation. Strat 1C is powerful when either it should be 38.2, 50, and 61.8 Fibonacci sensitivity line up with support and its demand zone. Okay, so we're essentially in normal exhaustions, right? Let's say we have a demand zone. In a normal exhaustion, we have a push exhaustion. So what was resistance is now becoming support. But in this scenario, Strat 1C, we're looking for additional confirmation as price makes an exhaustion to not only its zone, but also a significant fib. And we do that by using Fibonacci extension, okay? So the reason this is so powerful is because price will not only find buy-sell sensitivity for continuational push at completion of exhaustion to its zone, but also due to technical sensitivity of its Fibonacci retracement. So let's go to the characteristics of Strat 1C. Usually forms after a long extension or push, and this is true for all our systems. One of the things that you will notice is that we get into trouble. The most trouble we got into with CAD-yen is when we don't actually stay patient, wait for the push exhaustion. We're playing in between the zones, just trying to get in because we're expecting to move to the upside, which did happen, but we have to wait and be a little bit more patient, and that's one of the things that we're doing, okay? So usually forms after a long extension or a push, okay, which is true for all of them. Most common during stronger trends, okay? And what this means is for a Fibonacci extension, okay, for there to be a push, okay, let me, how do I explain this without making this complicated? Let's say there's an uptrend. A fib extension usually happens when there's an extension from its mean, meaning that there's actually a relative distance to area of average buy pressure. Okay, so that means when that happens, okay, this is usually a significant push, and that usually happens during a strong trend. So what I mean by my most common during strong trends is we usually will see that significant extension from its mean in a strong trend, where then we can capitalize on some sort of Fibonacci retracement depending on if price breaks its zone. When there is a low trending market, for example, price usually tends to stay closer to its trend line. There isn't any of these significant moves. Okay, so that's what it means by most common during strong trends. Okay, stop hunts happen. Okay, and it happens usually at its 31.8 or 50% fib, and we'll go over that in a sec. Okay, so let's do that. All right, so here we see, okay, our daily zones. All right, so obviously we're looking to find the trend. We have push, as you can see, stop hunt to the downside. Then we see another push back to the upside. Okay, this push could be measured as a Fibonacci extension, right? Because it's a significant, as you can see, significant extension from its daily zone. So we do not want to enter to the upside here. We want to wait for exhaustion before a continuational push. So as we take it to the same chart and we start to identify, okay, this is Strat 1C. All right, we've done our fundamentals. We have a separation of 5. Okay, +3, -2, that's a separation of 5. Okay, so that's okay for Strat 1. All right, and now what do? Well, we identify extension. And then what do we see here? We see our 38.2, or we see our 50, and we see our 61.8% fib. Okay, so this red line is identifying our 61.8% fib. All right, let's bring it in a bit. This red line is identifying our 61.8% fib, and this red line is also identifying lower lows. So as you can see, Strat 1C and Strat 1A sometimes can mesh. But what's the difference between Strat 1A and Strat 1C? When we have a zone meeting up with Fibonacci extension, we know that there's going to be a significant level of buy sensitivity, not only because it's reaching area of support, right? It's area of battle between buy pressure, sell pressure, and we know that we have fundamental support to the upside, but also reaching level of buy pressure from its fib. Okay, now what do I say by many times there's stop hunts at the 38.2, okay, or at the 50? Many times when we have a significant extension, we will start to see initial buy pressure from people at the 50 and at the 38.2. But if the 50, the only time we enter at the 38.2 or the 50% fib is if it lines up with its zone. Okay? So for example, if I was to do the extension and our 38.2 lined up with our zone, only then would we look to the upside at the 38.2. But because the 61.8% fib is the closest to its zone, we are expecting sell pressure to make an exhaustion to this Fibonacci extension rather than the 50 or 38.2. Thus, there's a high probability of stop hunts at these levels if they do not line up with zones. All right. Okay, so usually forms after long extension, most common during stronger trends. Okay, stop hunts happen often at the 38.2 to 50%. Again, remember, many times the extensions, majority of the time lines up with the 61.8. That's why majority of these stop hunts are at the 38.2 and 50. Let's change that. It's got it bothering me. Okay, boom. All right, so oftentimes can resemble Strat 1A. However, it has the addition of Fibonacci support. Remember, Strat 1A, what would make Strat 1C Strat 1A? If there was no lineup of Fibonacci, let's say, like, for example, the 38.2 is here, 50, 60, 1.8, it was below the zone or whatnot. When there's no actual lineup of Fibonacci, that creates the 1A, okay, rather than the 1C. Okay, so sometimes 1C is actually more powerful than 1A, all right, but it happens less often than 1A. All right, so strategy 1D, let's take it to the top. What is 1D here? As you can see, it is the impulse move. Okay, when price reaches a zone, impulse to the downside, then we look for retest of previous high. Let's talk about that.